Hey, how y'all doing? So in this video, we're going to be talking about the purge and revert strategy. So this is a strategy that was created by ICT, aka the Inner Circle Trader. I'll leave a link to his channel in the video description below. And this is probably one of my favorite strategies from him. And in my opinion, it's probably one of the easiest, most simple strategies that a beginner can trade, right? Because it's really simple. There's not a lot of moving parts to the strategy. It's very straightforward. So that's what we're going to be talking about in this video. Okay. And maybe some of you by the end of this video, you'll like the strategy and you'll really dive into it. You'll really work on mastering this one strategy. Because I mean, this one strategy right here, again, as I've already stated, it's one of my favorites. It's one of my favorite strategies that I've traded a lot in the past. Not so much right now, but it's still a working strategy. It's a good strategy. And really, you can make a full-time living. You can make an absolute killing just off of this one strategy. That's if you had the discipline, if you had the patience, and you manage risk well. This is really all it takes. This is one strategy right here on a platter, right? So here we go. Purge and revert. So basically, with purge and revert with this specific strategy, what you want to see is you want to see price first, or step number one, you want to see price take out a key liquidity pool, right? So, and for any of you that don't know what I mean when I say key liquidity pool, I have videos on that. Just search my YouTube for key liquidity pools. I go over all of it, but to keep it simple with this video, in this example, an old high. Okay, so we're looking at an old high, right? What is resting above old highs? Buy side liquidity. So you can see right here we have this intermediate term high, which means we have a swing high, which is your highest high in the middle with two lower swing highs on the left and the right. So we have an intermediate term swing high right here. See this? So it's important to note that above swing high levels, we have something that's called buy side liquidity. Okay, buy stops. A lot of people, they see this as a level of resistance, right? This is the ceiling. Price is going to come up. It's going to respect that level, turn on the dime, sell off right. Nope. This is a buy side liquidity pool. Okay, so when we have a buy side liquidity pool right here, short sellers, they're keeping their stops above this level. What we want to see is we want to see price come above that level, purge those buy stops out of the marketplace, and then we want to see a reaction, right? After it purges, after it sweeps that liquidity pool. Okay, so I'm using a short example in this video, but basically for buy examples, it's just the opposite. You'll just reverse what I'm teaching in this video. So we got buy stops above swing high levels and we got sell stops below swing low levels, right? So we have this swing level, we purge it, okay? Hence the name of the strategy, purge and revert. Purge and revert. So we purge that buy side liquidity out of the marketplace. Okay, I'm gonna go to a daily chart now, because you can see it on the daily chart as well. I just went to the weekly to make it a little bit cleaner. All right, so once we take out that high right there, what do we enter? Because this is actually, it recently had this shift in market structure on the daily chart, so a bullish shift in market structure. But when we took out that high right there, what did we enter? A premium marketplace. So premium means expensive and discount means cheap. So we entered a premium marketplace as soon as we purged that buy side liquidity. Okay, so what I'm going to do now is I'm going to note 50% equilibrium of this price range right here, of this move up right here. See this? And we're going to note it because once we go below 50%, that's a discount of this price range right here. I'm just going to note it. There's 50% equilibrium because I don't want to keep the Fibonacci tool on there. Right there. That's 50% equilibrium of that price range. Below it, discount, above it, premium. And I'm also going to note this fair value gap right here as well. See this? Because it's important to note these as well, because why? That's serving as a draw on liquidity. Okay, because this portion of price action right here was not efficiently delivered. It's an imbalance. Price doesn't like to leave areas on the chart like that. It wants to rebalance that price action. All right, so far, what have we concluded? Well, price had this big rip up right here, huge rip up right here, and it took out these buy stops. Okay, so existing shorts had their orders right here. price on this move up higher right here, it took those shorts out of the marketplace. And also on the opposite end of the spectrum, baited in breakout buyers that are looking for this breakout higher, right? They're getting in this and they're buying this breakout to get the rug pulled on them, right? So you're killing two birds with one stone. Okay, so, and then we got our 50 equilibrium price point, which is also something that you want to know whenever you like the move prior to that purge in liquidity, you want to note that price range and you want to find equilibrium, daily 4 hour, or just with this example, again, its price is fractal. I'm using a higher time frame and I like higher time frame charts because it's cleaner. It's easier to read in my opinion, but remember, price is fractal and the same signatures and price on here that occurs on a lower time frame as well. But we have our daily chart, we have our equilibrium price point, drawn liquidity, purge that swing high level. Again, there is that equilibrium price point with your fair value gap in there as well, serving as a drawn liquidity. So likely it's going to want to tap into this here pretty soon. And let's just go to a 1 hour chart, make it a little bit cleaner. All right, so now we're on a 1 hour chart here. All right, so remember, this is that first move up. All right, so you see price was ripping up, it was ripping up, it was ripping up, it was ripping up, it was ripping up, and it boom, it comes up. You see this horizontal blue line, that is that higher time frame swing level. Now just displayed on my intraday chart. Price came up and it purged those buy stops. It purged those buy stops out of the marketplace. Okay, now this next part is key. This next part is key, is you want to see a reaction right after purging those buy stops. Okay, I'm not a that is the best thing to do. Okay, I mean, if it works for you, do it. Do whatever works for you. But what I like to do is I like to see reactions off of my levels. I like to see a reaction. I like to see confirmation. Okay, what is that confirmation? What is that reaction? That reaction is a lower time frame shift in market structure, a lower time frame fair value gap. So right after you get a purge in liquidity like that, see how it came up, it purged that liquidity. Okay, then we put in a swing low level. And then what happened right here? Boom, you get a huge, big, explosive displacement to the downside, breaking that low of day, which is key as well. You want to see a break, low of day. All right, so right after, it's key. You want to see it happen very soon after you purge that liquidity. You want to see a reaction quickly off that level. Okay, you don't want to see it, chop around too much. You want to see it respect that level. It purged that liquidity, displacement. Right after taking that key liquidity pull, displacement. Okay, see how I broke that swing low level right there? That represents a shift in market structure. Big, strong, high probability shift in market structure on that level. Okay, and now we're going to know our fair value gap in here. See that? That's your confirmation. You want to see that fair value gap confirmation off the level, and you actually have another one up here as well. So, I want to note this one as well. Okay. So far, what have we concluded? Well, we got our higher time frame. We purged that higher time frame buy side liquidity out of the marketplace. We measured that price range that was created on that move up higher, which is very important as well. We want to find 50% equilibrium on that price range because above it premium, below a discount. We don't want to be shorting anything in a discount marketplace. Okay, and we also you want to note your key fair value gap imbalances that are serving us a draw. But also once price taps down into that imbalance, you could see some buying interest towards the play as well. So you want to note that as well. But beforehand, it's really nice to see that because it's serving as a draw on liquidity. This area of price action was not efficiently delivered. That's going to assist you in your short because it's a draw on liquidity. Okay, so it came up, it took that buy side. Now we go to our lower time frame, which is very important as well. We want that lower time frame confirmation. We want to see it respect that area after it purchases that liquidity. Okay, it comes up, purchases it, pulls back. It's still not ready yet on that first pullback because we don't have that displacement. Okay, we want that displacement. We want to see a strong displacement. It comes up back. It looks like it's going to break out right here. It looks like it's going to go for a new high of day, and then boom, you get a nice big displacement. It cracks that level, create your fair value gap confirmation right after taking liquidity, which is also similar to what ICT has taught in his 2022 mentorship. You can kind of see how it connects, takes that liquidity, displacement, fair value gap confirmation. Then what do we want to see next? Okay, because now we got it purged that higher time frame liquidity. We have a lower time frame confirmation. What do we want to see next? Do we want to be shorting as it's selling off like this? No, we want it to pull back into a premium marketplace. We want to be shorting in a premium, and whenever we are buying, we want to be buying in a discount. So we want to be buying in a premium, aka when it's expensive. So we're going to draw our Fibonacci from the high prior to the displacement to the low. See how price retraces up higher. It trades above 50% equilibrium. Premium market. That's good for a buy at that point. As soon as we tap into a premium, we test that old low, aka our level of resistance now in this case. Okay, and remember, whenever we have an old low like that inside of the fair value gap, very, very sensitive price point. Refer back to the series that I made on support and resistance. Old low inside of a fair value gap, extremely sensitive price point, good place for a short. It's also in a premium marketplace. It comes up, respects it almost to the pip. And then, oh, and also another thing is 0 institutional price level in there as well. So you have an institutional price level, which is ideal as well to get your short plays. And then you have the old low premium marketplace. Where would your stop be on this? A good place for the stop, you could put it above this high right here, okay? Or you could put it above this fair value gap high right here, okay? You want to make sure you put it above that high and not the first high or the first fair value gap high, because you want to allow for it to trade up into that as well if it wanted to. It didn't in this case, but still, to be safe, put it above that high right there, okay? So that would be your stop above that high. Your entry in this area around that old low or the institutional price level in a premium marketplace. Where would your profit target be? Well, profit target, that's kind of up to you, because we all have different ways of trading. So maybe if you wanted to be conservative, you could just tag this low right here. Just from first glance, I'm just estimating, looks like about 1-to-1. You could tag that low right there, or maybe you want to take partials, maybe take a partial right here and let it trade down into that imbalance, because we noted that imbalance beforehand, and it's likely going to want to trade down into that imbalance, attack these sell stops as well. That's a likely scenario. Okay, and 0 institutional price level right there, that looks like a little over 2-to-1 probably. Actually, let's just draw it on for the heck of it. Let's see what it is. So say you got in around that institutional price level, right? And let's say, just to play it safe, let's say to play it safe, you just want to risk that high just to play it safe. And let's say you took it down into that imbalance. Look at that. 2-to-1 risk reward. 2-to-1 risk reward on that play. If you were to do that, if you were to hit it in a premium off of that level, risking the high, taking it down into that fair value gap draw. And it's also still in a premium marketplace on the higher time frame. So that's a conservative PT as well. That's conservative PT. It's 2-to-1 risk reward. And think about it. Like these setups, they repeat, they happen over and over and over again. You just got to keep an eye on those key liquidity pools. And with a 2-to-1 risk reward, I mean, you could be wildly profitable just being correct 50% of the time, because you're not going to win them all. Okay, you could have this criteria, you could have everything you want, and it could still rip up, take out those highs. That's trading. You got to accept it. You're going to be wrong sometimes. That is fine, because remember, if you were to hit like something like let's just say, for example, you hit a consistent 2-to-1, you can be profitable and you could be correct less than half the time, and you could be profitable. And if you wait on setups like this, key setups like this, where it's just like, these are the types of charts where they like jump out at you. Okay, there's not a lot of thinking. When you see a setup like this, you know right away it's a banger. It's a banger if you see a setup like that, where it's such perfect respect for that. After taking out that liquidity, you can just get a nice big displacement, high probability. I mean, there's so many things in here, like one thing after another. Institutional price level, premium marketplace, level of resistance right there, taking out a big liquidity pool. It's in a premium marketplace. I mean, boom, 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 drawing liquidity on the daily. Like, look at all this stuff that's lining up for it. And think, if you were to just imagine with me for a second, if you were to exercise enough patience, enough discipline to wait for setups like this, you may not get it every day. Well, let me correct that. You're not going to get it every day. You're not going to get setups like that every day. But think, if you were to exercise enough patience, you waited for really good risk reward opportunities, and you executed. You were patient, you executed. And think, if you were to wait for setups like this that just jumped out at the chart at you, they were just no-brainers, clear as day. And you were to do that, think over a long series of trades, like 50 trades. If you were to wait for setups like this over the course of 50 trades, and remember, you can be wrong half the time and still be profitable. What do you think the result's going to be? You think you'll do all right? I think you'll do all right. Now, so that right there is, like, again, credit to ICT. This is one of his strategies. I'll leave a link to the video that he made on this strategy in the video description as well. I'll leave a link to his channel, and I'll leave a link to that video specifically But I mean, it's just a beautiful, beautiful strategy, beautiful setups, and they repeat. They happen over and over and over again. And it's just, I think this is one of my favorites in his library because it's just so simple. There's not a lot of moving parts to it. I mean, literally anybody can trade the strategy. It doesn't take some brainiac to do it. It's just so stupidly easy or stupidly simple. And what's going to determine your success is how patient you are waiting for it, how disciplined you are. That's what really decides your success, because there's a million different ways to trade the market. This is just one of the many, and it's a working strategy. It is a 100% working strategy. So again, for a full, complete understanding, make sure you check out the video he made on it. And yeah, so I'll catch y'all later.